Hello, hello, hello. This is Tracy L. Tate. I'm the CEO of TLJ Professional Services, where we are about all things financial. Welcome, welcome, welcome to Road to Revenue Masterclass. This is normally a Zoom, but I'm trying it on StreamYard today. So come on in, come on in, come on in, come on in. I will give it a minute before I start presenting. Welcome, welcome, welcome. Say hello when you join. I will get started in one moment. I can do all things through Christ that strengthen me. Easter is tomorrow. To those that celebrate, happy Easter. So I'm going to go ahead and start sharing. Unfortunately, the way StreamYard is set up, my file is too big, so I can't add it here. However, I'm going to present my screen, but then that doesn't allow me to see your comments. So, and actually, it will allow me to see your comments because I'm going to join myself. Here we go. Here we go. Give me one moment. Say hello when you come on in, come on in, come on in. But I am going to join from my phone, from my Facebook, so that I can see comments, because otherwise I cannot see the comments. So, about all things financial. Okay, so I'm live now. I'm live now. Yeah. Okay, here we go. So, introduce yourself. Good morning, morning. Say hello when you come on in. Say hello. Okay, so I'm going to start sharing my slides because it won't allow me to see the comments in StreamYard as well as present. I have you on my phone. So it may be a little delayed to answer your questions, but welcome, welcome, welcome to Road to Revenues. Stop losing money in your business. Okay. Share screen. And it's a window. It's this one. Share. From the beginning. Okay. So welcome and thanks for joining us today. It is a delay. Okay. There we go. So welcome to the Road to Revenues Masterclass, Accounting and Bookkeeping Basics for Small Business and Entrepreneurs. A free gift for staying. If you drop your email in the comments or inbox me your email, say Road to Revenues Masterclass or just Masterclass, I will send you the Journey of an Entrepreneur workbook. So, have you ever wondered why you started your business in the first place, right? Or how you can stop overpaying taxes? Do you even know if you're losing money in your business? A lot of people won't even know that they're losing money in their business because they're not tracking their bookkeeping and accounting. They're trying to operate their business from their bank account, and that's a no-no. Okay. So if you've wondered any of these things, then you're in the right masterclass today. Okay. Or even how to take my business to the next level. You're still in the right place. So our promise is that we're going to give you the best information to make the best decisions for your business. Okay. Best in class, best practices, do's and don'ts. That's all part of this masterclass. But our promise to you is that you're going to leave this presentation with the information you need to stop losing money in your business. Okay. So why now? Why not now? Right? Your business depends on your now, your deciding now, your decision to take action now. So everything is a now because number one, you're not promised tomorrow. But number two, things change. So the more you delay, the more your planning continues to change because life's, right? So if you delay in anything that you're trying to do, it changes what you're planning. So you have to plan for what's going to happen or what's coming to pass, not necessarily your here and now, and definitely not yesterday because you can't change yesterday. You can only plan for to go forward, right? So now is the time to make a difference in your life, in your business, in the legacy that you will leave for your family. Now, who am I? Why should you listen to me? I'm the CEO of TLJ Professional Services. I'm an accountant and tax professional, actually, of almost 40 years. I have a master's in business accounting as well as public administration. I've been a mentor for over 20 years, and I am a licensed California life and health agent. That is my license number. So a little bit about my story. Like I said, I'm an accountant of over 35 years, almost 40 now. I always specialized, or a lot of my career, I specialized in accounts payable, where the last position before I walked away pursuing my entrepreneur journey full-time was in 2019, but I was director of Digital Realty Trust. It was a $3 billion REIT. It's probably more than $3 billion at this moment. But at that time, I helped the company grow because I was with them for 11 years. So when we started, it was very minimal staff. Their revenues, they were almost $1 million company, I believe, 500,000 at the time. But through my leadership in that department, they were allowed to acquire or attain business acquisitions, of course, business credit, because as accounts payable, your money matters, right? So keeping track of your finances is very crucial in where you're trying to take your business, right? So, but I saw the need of my tax clients. They were paying too much in taxes. So I started with business structures, and then I helped them with bookkeeping and financial coaching because that's how I was able to help them move to the next level. But it was through this journey that I felt confident enough to walk away from my 9 to 5. And I figured if I can help them build their business to billions, why can't I do it for myself, right? And I love participation, so please put your comments in the chat. If you're on replay, please say replay, #replay. So my media story, you may have seen me on several platforms sharing my financial tips as well as abuse and how I went from my 6-figure position to create my 6-figure business. Okay, some of those platforms, I speak on the OAACC Financial Series platform, Your Wings Matter, Girl on Fire, Success Leaves Clues, Queen Experience with Dr. Queen Nikita, and then several other platforms, including the Financial Educator, Black CEO, so on and so on. And I've spoke on several platforms since then. My mentorship story. So I am the founder and president of Beat the Streets. We are a resource center for young adults, 11 to 29. We are located in Antioch, California, but we mentor them on education, employment, and life skills, ages 11 to 29. So one thing that we found was that they're really not ready to, or the light bulb doesn't click on till they're closer to 30 when that dirty 30 is starting to come in, right? So we increased our age range because there were a lot of youth, young adults, they're not youth, young adults that was needing support services at their age 28, 29, 27, right? So we increased it to 29. But if you are in need of educational support, helping get your GED, tutoring, whether you're trying to find a job or need help with your resume, or even trying to figure out what career you should start, come and see us. We're in the Antioch Mall, Summersville Mall, in Antioch, California. So, my volunteer story. I am the financial secretary for the National Coalition of 100 Black Women, Oakland Bay Area chapter, where I started. This is actually year 8 for me. I'm going into year 8, so been there for a while. But I am currently their financial secretary. And we're all volunteers of the National Coalition. You might recognize or know about the Madam C.J. Walker event. That's a signature event we do. We just celebrated 25 years of that event this past March. So this is my success story. I converted from a sole prop to an S corp. Okay. I literally went from Tracy Tate Bookkeeping to TLJ Professional Services. By doing that, it allowed me to eliminate that excess Social Security taxes and Medicare, right? I converted both of my employers into clients, right? I reduced my self-employment tax. It automatically limits my personal liability because it is a separate company. I separated my business from personal. That is key. That is key. That is key, right? And my personal income became a deduction for the business. Yay, it's a write-off, right? But best of all, I am able to manage my own retirement plan and my investments. So a lot of people, when they switch jobs and stuff like that, they leave their plan with their employer. Okay, what happens is when your employer make a decision to switch providers, to change their investment structures, anything like that, your 401k is held hostage with that company. So my opinion, you should never leave your 401k. So if you're sitting with 401ks all over the place because you done worked all over the place, you should consolidate those into either an annuity or into a prepaid life insurance policy where you front load the policy so that you get the best return on your money, because you're not contributing to that 401k anymore. It's really not growing. You're at risk of market. However you left it is how it is. That's how it's investing. So if you were on aggressive when you left, guess what? It's still aggressive, especially if you done forgot about it and it's not doing anything about it. Okay. So keep that in mind. When you leave a job, it's best to bring your 401k with you so you have better management of that money. When you leave it where it was at, you literally leave it hostage to the last company you worked for. So TLJ Professional Services story. So we are an accounting firm. Bookkeeping, accounting, taxes is our primary services. But we also do retirement planning. We do about all things financial. Okay. So if it's a financial topic, we do everything from setting a business up all the way through tax prep. So we do tax planning, taxes, of course, business and personal. And we also do coaching. Okay. Business coaching and financial coaching. So CFO services. We provide life insurance because I am a licensed agent. And then we are BBB A+ business as well as minority business enterprise. So enough. These are our services. Reconciliations, tax prep, bookkeeping, business filings, coachings, life insurance, as well as retirement planning. As a business owner, you are responsible for your retirement. Okay. So I was just talking about leaving your past company for and leaving your retirement hostage. Don't do that. Don't leave your retirement hostage at your last employer. Okay. So we can help you with your retirement planning. Now, this is what we're covering today. Business basics, bookkeeping basics, sorry. Accrual versus cash basis. That is majorly important because I don't think a lot of businesses understand or even pay attention to what basis they are. I've asked in a group before and they don't even know. So that's something that you, with your tax preparer, should have a discussion about, because when you're doing your books, and I'll get into this more when I cover that piece of the slide, while you're managing your bookkeeping, you're probably a hybrid, and you should be hybrid, especially if you invoice and you wait to receive your funds from another source, whether it's your clients, government, or anything else. You work with government, you really should be accrual. Okay. We'll cover best practices, accounting basis, do's and don'ts. We'll look at a few myths and bust those, and then we'll do a Q&A. So these are the 3 rules of the training. Be engaged, be interactive, because participation is key. Identify your biggest challenge, right? And be transparent about it. And then let's have fun, because knowledge is power. And the more that you enjoy yourself, it drives understanding as well as retention. So bookkeeping. What is bookkeeping? The infamous bookkeeping. Bookkeeping is actually the recording of your day-to-day activities. Okay. So what does that mean? That's your activity, like your invoicing, your purchases, your sales, your revenues, right? So that's recording of every single transaction you do in business, whether it's going through your bank account or not. Okay. Bookkeeping accounts for and shows the activity in your business. So if you have a software like QuickBooks, I'm very pro QuickBooks because I see the value that it gives to clients, right? So if you don't have an accounting software, at least invest in your business enough to get a bookkeeping software, okay, like QuickBooks, okay? But the bookkeeping allows you to see what your money is being used for, the money that you're collecting, as well as the money that you're spending. Okay. So it literally tracks every single activity that you do. So again, it doesn't have to go through your bank account to be counted based on your accrual or cash basis, right? So in a software like QuickBooks, if you connect your bank, automate your system, then it will automatically feed your transactions from your bank account. And with your bank account, you're able to see everything. All the money's in, all the money's out, any fees that come. Why is this important? I had a client that before they start working with us, they were just getting started in their business and the business took off, right? There was a fraudulent check that came through their bank because they wasn't tracking their bookkeeping. They didn't see it, right? They're just going along with business. And it wasn't until another check tried to come through months later that they caught that check and realized there was another check that went through. But because it was outside, or they didn't notice it until it was outside of the banking fraud time. So most banks give you 30 days to dispute a transaction. Because it was past that 30-day limit, they actually lost that money, okay? So it's very, very important to do your bookkeeping, number one, and see what activities are coming through your banks, because banks make mistakes. It's a high level of fraud out here, and it's your bookkeeping that allows you to see what's going on in your bank day-to-day activities, okay? And then it allows you to dispute charges that you're not familiar with, right? And it's accounting, looking at your numbers in your books, that really allows you to make business decisions and see where your money is going, okay? So what's the difference between accrual and cash basis? Accrual literally tracks every single transaction, whether it comes through the bank or not. Cash basis is literally what comes through the bank. It's money received or money spent, and it's recorded at that time. Accrual basis account for those invoices, although you may not have been paid yet. It accounts for those expenses, right? Those purchases that you haven't paid yet, okay? So that's what I meant by you may have hybrid if you have invoices that you issue and is not paid immediately, right? Or if you have purchases, that those net 30 accounts. So everybody is trying to build business credit. Those net 30 accounts is actually an accrual basis, okay, where you are allowed to make a purchase and receive those items and don't have to pay for it yet. So that's accrual. And that's where I say that your business may be hybrid, because in that hybrid situation, you're able, in like QuickBooks, you're able to run an accrual report to see what monies you're expecting to collect, what activities you expect to happen. But in a cash basis, you can run the report on cash basis. This is what actually happened. This is actually the money we collected. This is actually the money we spent. Okay, so that's the value of an accounting software as well, to be able to run those reports like accrual basis versus cash basis, to really see what money you have coming in and make business decisions based on your accrual method versus what cash you've actually received. You actually, a lot of times, need to do business with your cash, unless you have net term, right? But it's your accrual that allows you to really see and analyze when to expect that money, right? So that's where accounting comes in, right? Accounting actually analyzes your financial statements, which is your bookkeeping, okay? So with your accounting, you're able to see from week to week, really day to day, month to month, week to week, month to month, quarter to quarter, year to year, right? And project. You can really see what's going on in your business. So you can see if you're overspending on labor. You can see if you're overspending on cost of goods sold. So we work with restaurants, and one of the key things that we saw when we first started working with each restaurant client is that their cost of goods sold, they were spending too much on cost of goods sold. What is cost of goods sold? Cost of goods sold is what they were spending on the items to make them the revenues. So in their case, it was on their food purchases, right? It was how they were spending for their food purchases that was making them overspend. Therefore, it reduced the amount of monies they had to actually operate with, right? To maybe hire more staff, things like that. So in the restaurant industry, staff and cost of goods sold are one of the higher percentage of income expenses against income. So when you keep those within industry norms or even below industry norms, it increases your profitability. But it's the financial reports that allows you, or an accountant that allows you to actually analyze your reports, make better decisions, because as a lot of businesses, we have peak seasons, right? So we're in tax season right now. It's my peak season. As a tax preparer, we have two peak seasons. We have the March, April, which are the deadlines for corporations and then individuals. But if they file that 6-month extension, it's also a peak season in September, October, because those are the extension deadlines, right? So we have two peak seasons where we have more than the normal monthly amount of revenues that come in. Why is that important? Because I can better plan for those months that we don't have that money come in, right? So it's not a, whoo-hoo, I have all this extra money. No, what it is really funding the next few months after that peak season. So when you have a peak season in your business, you need to better manage the money in your high season to accommodate for the money that doesn't come in your lower season, right? So for a lot of businesses too, around Christmas time is a peak season, right? Because Black Friday, right? So you spend a lot of money leading up to that Black Friday to prepare for it, whether it's marketing, whether it's branding, whatever your offer is, right? So, but you use the monies from the rest of the year. So you plan accordingly for the peak season, right? So this is why your financial statements are important. Number one, to learn what your peak seasons are, right? And be able to recognize and plan accordingly. One moment. I love coffee. Okay. But it's to allow you to plan and plan accordingly. Whereas just running your business from your bank account or just looking at your bookkeeping is not enough. Now, there is a term called full charge bookkeeper that allows both bookkeeping and accounting. Otherwise, they are two different people. They are two different services. Bookkeeping, again, is the day-to-day recording of transactions. Accounting is actually analyzing your financial statements. Like with us, we are full charge bookkeepers. Okay. So we could do both. This is a testimony from one of our clients, the infamous Blue Sky guy. We helped them move into Vegas. Their cost of goods were extremely higher than industry average, and they always had a huge tax bill. So it was through our coaching that we were able to actually reduce or save them $90,000 in taxable income in their business. Okay. That's important. That's huge, right? We also help them with their cost of goods sold, which, like I said, for restaurants is one of their bigger expenses. Let me get it together. So you can read the testimony. They saw a big difference in their tax bill, and this helped a lot. We moved them from being a sole prop. So there's a lot of sole prop businesses out there that by simply changing your business structure could actually save a big, or can make a big difference in your business. So your structure matters. So best practices. Know your monthly, quarterly, and annual numbers. That's a must. That's how you're able to analyze those peak seasons I'm talking about, but also allow you to plan accordingly. See, when you try to manage your business from your bank account, you're only looking at cash basis. You're not looking at your big picture, right? So doing your accounting, doing your financial statements, investing in your business by getting the software like QuickBooks, you can even do projections, right? If you're keeping your numbers or your records on an Excel spreadsheet, that's good for tax purposes because we know that we're getting the information that we need. But unless you're really managing that spreadsheet where you're doing quarterly comparisons, you're doing annual comparisons, you're able to see your peak seasons like you're doing it monthly to really see your revenues come in, and doing setting up formulas or pivot tables to give you percentage of income, things like that. You're doing your business a disservice because those are vital things that you need to track in your business. Okay. Record keeping is a must. I suggest 7 to 10 years. It is not just 3 years, and it's not just for audit purposes, but it could be for legal purposes as well, or even to help your client. But record keeping is a must so that you can analyze too. But you'll be surprised at what you need to go back and look at, or what you need to pull. Number one, in case of audit, I always look at things from in case of, right? Because I'm an insurance agent, so that's exactly what insurance is, in case of, just in case, right? So, but record keeping is a must. I do suggest 7 to 10 years with all of this digital softwares and resources available. It does not have to be a file cabinet anymore. It doesn't have to be a big box in your garage taking up space in your house. You don't have to do it that way. You can get it digitized, and then you're maintaining that records. At the end of the 7 years is what I suggest. You could throw away a year every year, right, as you start a new year. And then invest in yourself and your business. That is a must. You have to stay abreast of industry changes, right? So with us, well, I'm in a highly regulated field, being in both accounting as well as taxes. But you have to invest in your business in order to scale, right? In order to take your business to the next level, in order to make business decisions, in order to attain more clients, right? You have to see what's going on in business. If COVID taught us nothing else, it taught us we better learn how to pivot, right? You have to invest in yourself and your business, because your livelihood of your business depends on it. So think about it. Imagine those people. So I've been doing taxes since we did it on paper. Okay, since the 80s, actually. So imagine if I didn't stay abreast of the tax law changes or the software that comes out and all of that stuff as it pertains to taxes. I would not be relevant. The clients are not going to come to me and continue to get paper returns done. Maybe somebody as old as me, right? They might still be stuck in the paper world, right? But other than that, how am I supposed to scale my business with 10 years ago information, right? Or even 2 years ago information, because things change every single day, right? So you have to stay abreast of your business changes in your industry, as well as changes in your line of work, as well as the what people want, right? So you have to invest in yourself and your business. It's a must to sustain your business as well as grow your business. So these are a couple of myths. I should pay myself a small salary to save on taxes. That's actually not true. So if you pay yourself a small salary, then you actually pay more in taxes, because that becomes untaxed money. Okay. So you'll pay more taxes on that because you never paid the taxes on it. Okay. You could be penalized for not paying enough taxes, right? So, but the biggest key is that you pay yourself a small salary. Your unemployment, your Social Security, your Medicare, all of those things that you need later on is tied directly to your salary. And they don't give you 100% when you go on disability or unemployment or Medicare or Social Security. They're going to give you a fraction of what you had before. So if you paid yourself small, guess what? Your money when you retire is going to be that much smaller. Does that make sense? Right? So that's a myth. Don't pay yourself a small salary. Don't listen to whoever said that. That's not true. That's not best. It costs too much to incorporate. It actually doesn't. It is an investment in your business. However, by not incorporating, I say the term, you leave money on the table, because it's less things that you're able to write off, that you're able to do as a sole prop, especially when it comes to lending and business funds and stuff like that. A lot of companies won't use sole prop because it's you individually. That's how they look at sole prop, right? And then S corp is a business type. It is not. It's a tax election. So if you're an LLC, you would still be an LLC. You're just going to take the back tax benefits of being an S corp if you choose that election. Same thing with C corp. You'll still be a C corp. You're just choosing the tax benefits of being an S corp. You cannot be an S corp as a sole prop. Okay. This is one that I hear actually quite often. I should be a sole prop since I'm new to business, or I'm just starting my business, so I have to start as a sole prop. No, you don't. I'm a firm believer in begin with the end in mind. What's your big picture? And lay a solid foundation from the start. Okay. It may not be sole prop for you. And no two businesses are alike, in my opinion. No matter if you're in the same industry, what makes your business different is you, right? Your motive, your intention, your morals, your values, all of those things that your business is intended to be is what makes your business different from the next person in the same industry as you, okay? So just because they're an LLC doesn't mean that you should be an LLC. You need to look at what your big picture is and lay that solid foundation from the start. Okay. I would have to pay more taxes if I'm an S corp. No, you don't. It's a tax selection. Okay. So it allows you to deduct more things than just being a single LLC or partnership. Right. So if you are those things by itself, you can't deduct things like your wages. People get that misunderstood. You could not deduct the money that you take out the business as an expense of the business. Okay. And the same franchise tax that you have to pay, which starts at $800 for California, is that's an annual fee, annual franchise fee. You got to pay that just being registered in the state as either an LLC or C Corp. The S Corp election is irrelevant to those franchise fees. You're going to pay that regardless. And then it goes up based on your revenues and profits. Okay. And then the infamous, my business owns a nonprofit. No, nobody owns a nonprofit. A nonprofit is charitable. What does that mean? That means when you choose to close a nonprofit, the assets in the nonprofit is not yours. The liabilities are not yours either, right? So if you have a nonprofit and you still have assets, whether it's cash, buildings, equipment, all of that stuff, you have to either donate it to another organization, or if you sell it to kind of relieve your liabilities, whatever cash or assets are left need to be given to another charitable organization. It cannot go to your corporation. It cannot go to you. Okay. You don't own a nonprofit. You could be the founder. You could be an officer, right? You could work in the nonprofit, but you or your business does not own a nonprofit. Okay. So to be clear about that. Some do's and don'ts. Always, always, always open a business bank account, because you do not want to commingle your personal and business funds. That's do's and don'ts, right? You want to separate your business activity from your personal activity, because I always say in case of audit, right? Because literally it's not a matter of if you're going to be audited, it's when, right? Because it's nothing that you have to do wrong to cause an audit. It could be a random audit. And there are more than one type of audit. It could be a workers' comp audit, okay? It could be an IRS audit, right? There's other audits. It could be a legal situation. So when you separate your business from your personal, it keeps your personal separate. And that's key in any of those three things, to making sure that what you write off is actually an expense for the business. Hire an assistant in order to scale your business. Okay. You can't be good at everything. So that's that. Don't leave money on the table trying to do everything. Okay. You know when to need help, right? Recognize when you are the bottleneck. Recognize when things are not getting done or falling through the cracks because you're trying to have your hands in everything, right? And guess what? I was the pot calling the kettle. That light bulb finally said, quit talking about it and do it, right? Practice what you preach type thing. I had to tell my own self that, because it was hindering me from moving my business to the next level, okay? Reconcile your accounts monthly, not just your bank, but your general ledger accounts as well. Why is that important? Because you make decisions based on your financials. If your financials are wrong, then you're making a decision based on wrong information, right? So, like I said, with cost of goods sold, let's say that in the bookkeeping, the recording the day-to-day transaction, I put something in cost of goods sold that didn't belong, right? I'm going to make a decision about cost of goods sold that didn't even apply because it was misrepresented. Does that make sense? Or just the same, your cost of goods sold could be higher, but because the expense got put somewhere else, you're thinking you're within industry average, you're good, but you're actually not. You're not doing, you're doing your business a disservice by not reconciling your accounts, okay? Monthly, if not daily. Like I look at my bank every single day, but I don't reconcile it, but I do see what transactions are coming through, right? And I look at my GL accounts as well as my bank account every month, okay? And then file your monthly, quarterly, and taxes on time, okay? Whether it's sales tax, whether it's your personal taxes, whether it's business taxes, file them on time. That's how you eliminate some of the fees, right? I hate bank fees. And that's what those late filing fees and all of those stuff acquire, is you just throwing money out the window, right? So when you file on time, it allows you to kind of stay or not pay those bank fees. That's That's what it is in a nutshell. Now, some more of the don'ts. I've been covering do's and don'ts at the same time, but do not ignore your IRS or franchise tax board notices. State of California don't play. So don't ignore franchise tax board for real. But the difference is this. The IRS will send you a letter first and tell you, hey, this is what we're about to do. Franchise tax board is take your stuff first, then say, this is what we did, right? So that's the biggest difference. But don't ignore the notices, because not all notices are billed. It could be a change in your tax structure. It could be a change in tax liabilities, rather. It could be a change in your reporting, things like that. So don't ignore your notices. And one person say, hey, they could be sending you money. I've actually seen that happen, right? Especially with the stimuluses and all of that stuff. You know, if you ignore these notices, then you don't even know what's going on. And then never make a decision through emotions. Okay, step back and then plan. Because when you make decisions during an emotion, your emotion is temporary. Okay, when you make a decision based on a temporary emotion, then you can't change it. Right. And it could be the difference between staying in business or not staying in business, taking your business to the next level or not. Right. Where if you step back or just plan, you know, life's. So even though you might plan something, there may be a hiccup. You have to even put that in your plan, because it's going to be a hiccup. Right. That's just how life's. Right. How you plan something never goes 100% as you planned it, whether it's an event, whether it's life, whether it's marriage, whether it's kids, you know, life's. So don't make your decisions based on your emotion, a temporary emotion, right? Reevaluate if you have to, and then also plan. Okay. Now, what's best for your business? There is no one size to fit all. Okay. That's my motto. There's no one size that fit all in business. Okay. That's where my example earlier, where I was saying, just because this business is an LLC mean you need to be one. No, that's not how it go. Okay. You do what's best for your business. And what's best for your business is based on what you're trying to do in business, not based on somebody else. Okay. Begin with the end in mind. This is not a permanent space. It's a temporary space. So if you look at and plan for where you're going versus where you are, you can predict where you're going. You can speak it into existence. I'm a firm believer in that. Affirmations, right? When you begin with the end in mind, you know what path to take because you know where you're going. If you don't look at or plan for where you're going, how do you know when you get there? How do you know when that pivot comes, right? Or that hurdle comes, what to do next if you don't even know where you're headed, right? If you're just going along, because life is life. Life is going to continue to life, right? So have a plan, but begin with the end in mind. Where am I trying to get to? Where am I trying to take my business? What am I trying to do and why? Right? Lay a solid foundation from the start. I'm a firm believer in that because that's kind of like looking at where you're going, right? Laying that foundation, because it's hard to, once you start building, to try to put a foundation under something, then to lay the foundation first and then build on top of it, right? It's hard to put a foundation. I look at it as a house. You can't put a foundation under a house without having to jack it up, without the risk of it crumbling, right? After you've already started building. So if you begin with the end in mind and you lay a solid foundation from the start, then you know you're on a solid foundation and you continue to build. Okay. And now's the time. Why? Because you're not guaranteed tomorrow. Your family is dependent on it. Your business is dependent on it, right? Now is always the time. This was another testimony of Mark. He's a mentee that he thought he could deduct everything. I mean, literally. And it was through my coaching that he learned a lot of stuff, right? And this is his testimony. TLJ gave me the information I needed to better understand saving taxes in my business. Tracy was awesome, explaining to me how taxes affect my business and what I need to do to implement the tax plan that works best for my business, right? It's for his business. And in his opinion, I'm the best out there, highly recommend. Now, your outlook on life drives your mindset, okay? Your destiny is not defined by yesterday, but what you do today and beyond. Okay. That's that planning I was talking about, right? But if your mindset is affirmations, is what I was talking about as well. If your mindset is that you can't, or you have to wait, or you can't do, I can't afford, I am broke, you speak all of that stuff into existence because that's what you're telling yourself. Right? You're telling yourself what you can't do. Whereas if you tell yourself what you can do, that's what you're going to do. When you say, oh, I'm going to get this next job, guess what? You get it because you're intentional about what you're doing, right? So your mindset drives your entire existence, whether in your personal life or in business. And you can't change yesterday. You learn from yesterday, right? So your destiny, where you're going, is not defined by what happened yesterday or 2 years ago, a year ago. Just because you planned something this way and it didn't happen the way you planned, that's life, right? But it should not change your mindset on where you're planning to go, right? Your destiny is truly built on today and beyond. Not yesterday. But your mindset is key. Now, we offer a business strategies consultation. You want to be our next success story? We have plenty testimonies. This is not for you. If your mindset says, I can't. This is not for you if you're not ready to take your business to the next level or even yourself, right? This is not for you if you have limiting beliefs of what your business can and cannot. If you don't know where you're going, this is not for you yet, right? This is not for you if you're not ready to invest in yourself and your business, period, point blank. Why now? Why not? Everything is now. Remember we talked about that. This is another case study. They had 3 partners. They were not looking at their financials from month to month. It resulted in falling behind on liabilities, losing money in the business. But through the financial coaching, they were able to get their liabilities caught up. Their monthly expenses is now handled, and their business has been able to move forward and actually thrive. Okay. This is for you if you're ready to invest in yourself and your business. This is for you if you're ready to take your business to the next level. This is for you if you want to make sure you lay a solid foundation for your business to build on. And even if you started building and you're ready to put that foundation in, it's never too late. It's just best practice to lay that foundation first. This is for you if you're ready to act now. The business strategies consultation has a total value of $2,000 and is actually way more than that. But this is the benefit. So you can save money on your taxes. You can be better prepared in making business decisions. You lay a solid foundation for your business. Key. And then you build your business with confidence because you know where you're going. You know what you're trying to do. You planned accordingly, right? Life is going to life. There's no perfect step in this path. There's no perfect road ahead, right? But with your confidence, it allows you to sustain and hold your head up when life and keep it pushing, right? Those are the benefits of this consultation. You can use the bit.ly/TLJ business consult. So bit.ly/TLJ business consult. I do have a QR code coming up. So this is what's included. 1 hour strategy session, an assessment of your goals, your big picture. We're going to analyze your business where it is now and where it's trying to go. Your game plan to move forward, invaluable, right? This is what one of our clients who took advantage of this consultation, his coaching call was amazing. I'm knowledgeable, I'm caring, I'm passionate about the success of my clients. Yes, I am. Can't beat it. Money back, 100% money back guarantee, 100% satisfaction guarantee. So again, bit.ly/TLJ business consult is the link. You try a consultation and you don't see a transformation, you'll refund your money, no questions asked. We know if you commit to us, you'll see powerful results. That's why we have this 100% money back satisfaction guarantee. All risk-free investment, right, is a QR code. You could take that action now. Are you worth it? Remember, now. Of course you are. So total retail value is $2,000 if you booked it individually for this webinar, for this training, for this masterclass. You get your risk-free assessment for a whopping $250. Okay, $250. There's the QR code. It's risk-free. There's the bit.ly/TLJ business consult. $250. Can't beat that. This is part of investing in you and your business. It is a business write-off. Anything you do with TLJ is a business write-off. This is a part of investing in you, your business. This is a part of laying that solid foundation. This is a part of planning and knowing your big picture, knowing where you're heading, right? And I tackle your mindset in the process because that's where it starts, right? You can follow us on all platforms. You're watching us on some of these platforms, right? But all platforms. So LinkedIn, Facebook, Instagram, YouTube. I have several pages on both of those. So TLJ Professional Services or about all things financial. And then if you missed the very beginning, I mentioned you could put your email in the chat or you can DM me or inbox me with your email. Use the word Masterclass, and then I will email you the free gift, the Journey of an Entrepreneur workbook. This is a workbook that I created to help you in your journey. And we'll have Q&A, but I do want to put this back up, okay? So if you have any questions, you could drop it in the chat. I appreciate you attending. I am going back to the webinar. I'm going to leave that up so you can have it. But if you have any questions, I am back where I can see your questions. So ask away. Otherwise, this is your opportunity to take your business to the next level. Again, if you're watching this on replay, type #replay. Take advantage of this risk-free offer, okay? It's risk-free. If you have a business, whether you're a sole prop, LLC, C Corp, S Corp, and you're at that space of now, right, where I know I need to take my business to the next level. I don't know how or when, where, how to do it. Take advantage of this risk-free consultation. You will not regret it. It is a tax write-off and it's priceless, okay? We offer 100% money-back guarantee if you do not get the result that we promise, okay? This is on replay. You can pause and take the screenshot and all of that good stuff. So I'm about to end this broadcast. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. And this has been your Road to Revenues Masterclass. Stop losing money in your business. Everything that I shared today is going to take your business to the next level. Take advantage of this risk-free consultation, this business consultation, bit.ly/TLJ business consultation. It's over a $2,000 value for $250. You cannot beat that. I see you on my calendar. You have a blessed weekend. Happy Easter if you celebrate. Okay. And I look forward to seeing you on my calendar and taking your business to the next level. Be blessed, be blessed, be blessed.